Right, so I am expecting some breakout today. Okay, if it breaks up to my bullish high time frame direction, that'd be great. Okay, there's nothing stopping it to break to the downside. Hello everyone, welcome back to FX 20 pips. Today is the 24th of May 2023. Time is now 1:21 p.m. It's a Wednesday. My time GMT plus 8. Now I'm just going to carry on from where I left off on yesterday, and mainly we'll be talking about the breakout buy and breakout sell box over there. And then as we go along, let's see how much time we have spent, and then I might expand into some other topics. Okay, so this is yesterday range. Alright, so yesterday we had a breakout buy and breakout sell, and what we can see is that there was a very big bearish candle that broke through the sell zone. It closed here, alright, and then it carry on with the bearish candle, but then buyer starts to come back in, right? So at this stage here, this would be the first candle that is closed outside of this breakout sell, and then my theory is that you always have to wait for the second candles and see what happened. All right, in this case, the second candles went down, came back up. All right, so here you might have a difficult a decision to enter for a sell, because you see that the buyers bought back order trade from the seller. Okay, whether is the seller take a profit in order to buy out, we don't know. Okay, but what you can do is, all right, you have confirmation of first candle out, you see the situation of this second candle. So however, the price is still definitely below the sell zone. So what you need to do is, the moment price went up and dropped below here, okay, the moment price dropped below the opening of the second candle, I believe it is pretty good plan to start selling. All right, with the stop loss here. Okay, so you can see that the price actually went down, further down, came back, retest. What is it retesting? The low of yesterday. All right, so once it retested the low of yesterday, and then the seller comes in again, and then it crossed the low of the second candle, okay, I would enter from here, and the stop loss will be here. Make sense? Yeah. So if the trades was to go back and stop me at my stop loss, so be it. Okay, that means the market proved me wrong, so be it. All right. But then in this case, you can see that the seller keep going down. All right, and then went here, the lowest for yesterday, and there was a range here. All right, and then I have also explained in the special edition how this came about and how I missed the trade. All right, so you can look at it under the I think 23rd of May video. All right, that's one of it. I will try to put a link here somewhere so that you can refer to it, where I explain this portion. Right, okay, going back here, and I like to see all these, you know, when the price go down and then come up, you can see all the candles, not one to close above here, right? This candle reached the sell zone here and stop. This indecisive, this one, right? Nobody wants to go up here until the next day, which is today. All right, so today is Wednesday here. Right now we are looking at this area. Okay, so So I was talking to my partner. I said, oh, the price went down here and shot up. She said, yeah, I know why it stopped here. I said, why? And she said, because of FOMC. I said, what FOMC? And then she told me about it, and I said, oh yes, I plotted FOMC lines too. So I'm going to show you now where is this bounce from. All right. So let me open up my events. Where is it? Here we go. Okay. This was not plotted yesterday. This was plotted throughout the FOMC. And I have one which is post 5 FOMC opening. And exactly at this line. Okay, let me zoom in. Okay, we are at a 1 hour. Let me just zoom in and show it to you. Let's go through 1 minute. All right. Where are we? There we go. So price came up from the sell zone, touched this level, and went up. Okay, let me just zoom in further for you. Here we go. Post FOMC opening. Price touches there and go up. Why it touches here? I don't know. Okay, but all these are the levels which I drew. Now, so you may be asking, what is this? Why is this FOMC opening? Basically, I'm trying to draw the levels with some of the economics data. Okay, I mean, a lot of people say, oh, you have to understand the fundamental. Yeah, but I'm trying to put in the fundamentals into the chart, and I found it that this is one of the way to do it. And where is this post 5 FOMC now? Let me just show you. Let's go to 8 hours. There we go. So we have the post 5 FOMC opening, and this is the level here. All right, this is the 8 hours. Let me just zoom into the 1 hour. There we go. So post 5 FOMC opening, post, that means the next day. All right, this is the opening, right? Meaning that this one is the FOMC period, okay, which is the 1st of February. Okay, it says 2nd of February, 2 a.m. because it's my GMT plus 8, remember? Okay, this, if I'm not wrong, is can't remember, is it New York time at their 2 o'clock? Yeah, I think they are slower by us by 12 hours. So this will be New York time, 2 or 3 o'clock. All right, and this is my GMT plus 8, 2 and 3 a.m. Okay, but basically that to me is the 1st of February was the FOMC. So the next day, which is the second day, okay, where the price is when it opened up. The actual FOMC date, right? The next day when the price opened, I call it FOMC opening, post FOMC. So there is a 5, there's a 4, there's a 3, there's a 2, the next one, the next one. So basically I have been tracking it. I can't remember since the first one, but I can't remember when was the first date. All right, I didn't go back 10 years and all this. No, it's only recently that I'm tracking it. All right, now, so going back to where the price bounced off yesterday, does it make any logical sense to you? Nope, it does not. All right, first of all, you have to understand that the price has gone past it so many times. Okay, just slice through it, slice through it, slice through it, came up, slice through it, came up, slice through it, came up. Yeah, and then for yesterday, it just happened to bounce off there. All right, is this something that is a secret trades or some secret skills that I have? No, nothing. Okay, don't look too much into it, but I'm just telling you, I use the fundamentals and I just somehow plug it into the chart. Okay, if it doesn't make sense to you, don't find all this plot. You don't have to do it. Okay, I'm just trying to tell you that, hey, it bounced off there. Okay, and then let me show you the others. I even have this is a recent one. Okay, FOMC post, and further up, what do I have? Let me show you. There we go. These are all the fundamentals. Yep. The low during the Great Recession, the next day after the Russia-Ukraine war, all right, Brexit, and then the official Brexit. All right, those are the fundamentals that I plug it in, and of course, it's for GBPUSD. Okay, if it makes sense to you, do it. If it doesn't make sense to you, then don't do it. All right, you have your own method. Yep, just use some of my method if it makes sense. If it's not, just scroll past, as what they say. All right, so that was for yesterday. Okay, that was for yesterday. And what should we be looking at next? All right, let's go to the higher time frame first. Let's go back to our 8 hours. All right. Remove the events. 8 hours, I need my range box, which is this. Let me close away. Oh, this is a line. Let me remove the buy and sell. There we go. Remove yesterday. Okay. So the 8 hours box is still here. All right. It came out. The second candle is bullish, but it closed below. Okay, logically, I would have changed the new box here because the first candle, the second candle are both outside of this box, right? So logically, I would have to change my box to here, right? But I'm also thinking that since the third candle went back in, this might remain. Okay, so that's what I'm trying to say, is that try to be flexible. All right, and then in order to do that, I can also create another box, which is a temporary box if you want to. Okay, this is my temporary box. Okay, without changing this actual one, I can say, all right, let me just temporarily, let me get a minute. Let me just temporarily plug this in. Okay, and then so this is the next box. Yep, so both are the same. Both are 8 hours box. Okay, just that I refuse to move this one first because the second candle was so bullish, and now the third candle is within here. Right? If this second candle is a bearish one and went down, okay, I would definitely move this one to here. All right. So at this stage, I'm just like having two boxes here. And yeah, we can just observe both, or just hide away this one and keep this one. All right, end of the day, be flexible. All right, be flexible so that you are not too stressed over it. Okay, you need to enjoy trading, not be stuck into some rigid confinement. Right, so that's the 8 hours. Let's go back to the 1 hour. Yeah, yes, I forgot to talk about the trend line. Yep. So remember yesterday I was talking about the or the day before I was talking about the P wave, and I talked about price being squeezed, and then it will either go up or down. And of course, this one went down yesterday. Okay, went down and went up. Where did it retest? It broke through the trend line. Okay, no candle broke below. Sorry, excuse me. No candle broke below. And here we go. We got squeezed. We break through, went down, hit the FOMC opening, zap all the way up, and retested the trend line. Yep. So this trend line was not adjusted at all, and it just happened to retest there. Miracle or not, I don't know. Okay, but it's something that I always use for confluence. Right, so this was the 0.1, this was the 0.2 of it. Let me just show you. There you go, this is the 0.1, you can see the dots. This is the 0.2, you can see the dots here. Straight line, and the price happened to retest this area. Okay, so yeah, so let's go back and do our routine. Okay, our daily routine. Now, daily routine is very important because if you have these repetitions, it sort of create a habit for you and a behavior so that you don't jump into the trade unnecessary. Okay, you do what is needed every day so that to help you to have a understanding of the chart and to have a consistent setup. All right, so what do we do every day? Do you remember? We do our previous day high and low. So this is previous day high, previous day low. What do? We get a fib here to here. Midpoint is the 50. Let me just extend this one. Alright, the midpoint is here, 50, thereabout. Yep. Alright, let me just close the range box. There we go. So the price is approaching the Monday opening again. Right, so if you look at the weekly charts, most probably you'll be seeing a sort of a dodgy, right, candle with wick up, wick low. Yep, so quickly without actually going to the weekly, you can sort of know this week the price is not much different from the Monday. Okay, moving on. Can we draw a buy and sell zone? What do you think? What time is it now? This is 1 o'clock candle. Frankfurt at 2 p.m. my time, London 3 p.m. It seems to be going down. I'm looking at the day bearish. Sorry, you call it bullish. Bullish. 2 bullish candle. And this seems to be the high of all this. Right, it's getting close. I think you just need some more momentum for the volume to come in to push up, I think. But then we have news today, eh? The news for the GBP, I think CPI or something like that. So market might not be sure about it. Now, okay, let's move on and draw the buy and sell. So it's easier today to draw the sell zone. You can see that today low is basically here. Current high is here. All right, these are all the Asian session. Right, so with the low, just by looking today, okay, at all these candles, this is the low, and the next close or opening is here. So I can draw a box here. This could be my sell zone. However, if I look left, I see that there's another low point here. Okay, so I could also draw a box like this. Alright, so you have to see which one is more logical and comfortable to you. Now, the second box here is basically below the day midpoint. So the idea would be, if the price wants to go down, it would have to actually break the day midpoint, all right, before it comes here, right, to give me a conviction that it does want to go down. Because if price doesn't want to go down, that means it will have to, of course, keep going up, or the midpoint could be a resistance. All right, so before I do any trade for selling, might as well I put a zone at the bottom. That means if you don't come here to this level, I wouldn't even want to look at sell. Make sense? So because there's no point for me to put a box here. All right, it could just go down, below the sell zone, hit the midpoint, and bounce up, right? Okay, hope you understand what I'm trying to say. So I'm going to draw a sell zone here, like this. Get the box, put on the Manet, go up here, drag it up, okay, and then put it to this, and this is my sell zone. Hope it makes sense. And then for the top bit, logically, here with this line, okay, if I were to scroll left, I can see that it's just roughly around here. There is nothing wrong to put this one and here. It will be quite wide here. Okay, now again, like what I said so many times, I'm looking for a buy because of a higher time frame is bullish. So if I want to buy, I want to buy lower, right? So there is no point for me to put a buy zone higher here where I'm buying more expensive when I can buy cheaper here, right? No doubt it is only a few pips away, okay, but for today, you still want to buy low, right? Buy low, sell high. So my zone will be much lower here. So that's what I'm going to do. Here, put this one here and here. There we go. And I call this my breakout buy. Okay, what's the stop loss sign? Pip size. This is about 3 pips wide, that's fine. And this is, oh, let's try again. This is 2.6 pips. Alright, that's pretty good. Okay. So this will be my breakout buy and breakout sell. Now, looking at this candle, it shot up so high, and this area here, depending on which YouTube guru that you have learned from, some people call it fair value gap, somebody call it imbalance, whatever it is, whatever name you call it. You can call it KFC, Burger King, McDonald's, I don't care, as long as it makes you money. These are the areas that the guru says price might come down. Alright? Because there's a Manex here, so-called Manex here, by the guru, alright? Not me. Okay? So meaning that if you base on their theory, it will be a case of price coming down to fill it up, and then from then on, I don't know, it could be going up or it could be going down. Yeah, so if that's the case, then you might also want to draw a trend line. Let's put on a minute here and here, or here and here. If price come down, break this trend line, and break this trend line, break here, you might just want to go and fill up this area. And if price break this trend line, it tends to go to the next trend line. Now, whether it breaks the sell zone, that's hard to say, right? But then the guru will tell you price will come back here. I don't know. Okay, there are so many ways to trade, that's why I say. Anyway, if you're looking for sell, you will keep this trend line. Once you break, you keep selling, yep, until this area. If you're looking for buy, this area, make your own decision, trust your own chart, okay, buy up and let it run. I'm not asking you to trade. I'm not telling you what level to trade. Okay, I'm not telling you to trade here. Even price close out here, I don't trade. so you don't follow blindly. Do your own chart. Okay, what else? Now we have a 1 hour. I've done a breakout buy, breakout sell. Is there anything you want to know more? I think that should be it. Okay, I'm just going to put back the 8 hours range box. Put it back to the 8 hours. Hide away all the lines. And this is where we are today. Okay, so hope you enjoy this video, and I'll see you at the next one. Thank you.